We are 2 hours into trading. It is Tuesday, February 2nd. Hello, traders. Let's take a look at the market, see what's happening. Going to give you a little bit of S&P trading analysis right now to start off. We're going to go into a 5-minute chart of the SPY. You can see how the market has been running higher and higher. We had a bullish divergence, market higher, 1OP indicator going down. There's a bullish cross right in here that told you we're going to go up. We did. Now we've got the 1OP indicator spiking, waiting for a bearish cross in here. That could signal the top. Now I'm not going to short it immediately. Why not? Because yesterday was a very, very strong rebound in the market, and today we gapped 30 points higher and had follow through. So this is good control by the buyers. I'm not going to rush in and fade this market right away. What I'd like to see is another long red candle, and then I'd like to see the market try and get back up to the high of the day and not able to, then a couple of red candles after that. That double top lower high with a 1OP bearish cross would give me the confidence that I need to short the market. I also believe that apart from the 1OP indicator, that we've got some patterns that are setting up. You can see how the market rallied on these tiny little candles, and then we get a little bit of a blow off top, this long green candle, immediately reversed. That would not happen if the market conditions were super bullish. So we gradually recover with a bunch of little tiny candles, and we make a new high just barely, and then wham, another red candle. So it looks like we're going to start seeing some selling pressure in here. And I'd be surprised if we didn't, because we had heavy selling last week. This is the heaviest selling that we've seen since November, and we actually had almost back-to-back days of selling. So the S&P fell to the long-term uptrend line right here, and you can see that right there, and it fell below it. So that was bearish. We also closed below the 50-day moving average on Friday. That was also bearish. But yesterday, the market gapped higher, was able to hold all of those gains. It did test that 50-day moving average. It closed near the high. It closed above the upward sloping trend line. So that means that support is still intact. That is bullish. Today, we've gapped higher and we've held the gains. Now, I would be surprised if we didn't at some point in the next week or two test the low from last Friday in this 50-day moving average. But for right now, who knows? Maybe this was the little dip that they needed to shake out bullish speculators. Buyers were lined up. If we go through, the upper end of this channel is now much higher, but if we go through the all-time high with ease in the next couple of days, that tells me that we could be seeing a really big buying climax. We've got a $1.9 trillion stimulus package possible. Democrats control Congress and the White House. They've been saying that they're going to move forward with or without Republicans. That's an incredible amount of money, and it comes on the heels of $900 billion in stimulus that was approved in December. Our economic numbers have not been that bad. Yesterday we had ISM manufacturing. It came in at 58.7. That's a strong reading. Tomorrow ISM services tomorrow, ADP tomorrow. Then we have the unemployment report on Friday. We've also got big earnings after the close. We have Google and Amazon reporting after the close today. As I've been saying in my comments, I think that the market bid will be fairly strong until all of the mega cap tech stocks have announced earnings. Those are the last two of the giants that have to report. We've seen a negative reaction from all the other tech giants that have reported. So we'll see how these two come out. I'm expecting really good numbers from Google and Amazon. Is that already priced in? Perhaps it is to a large degree. But if we were going to get a huge rally, it would come on the heels of those numbers. Realize that earnings season is front end loaded. That means that the strongest companies report early. As we get into the back half of earnings season, I don't think that the numbers are going to be as strong. So for right now, the channel is back intact, and it looks like the market's going to continue to rally. Let's keep that 5-minute chart up, and we'll take a look at a couple of trades, see what's happening. And now you can see Market was not able to attack that high, but it still needs to pull back. And then I'd like to see a green candle. You can see how this 1OP indicator is still extending. If I were long stock right now, I'd be a little bit careful and I would be taking profits. So let's take a look and see if we can find some nice stocks. What's my market analysis? Market first, market first, market first. I think that this upward sloping channel is going to stay intact right now. We tested it, successfully tested it, meaning that we bounced back into the channel. Everything looks pretty good. Does that mean that I'm going to be rushing out and selling out of the money bullish put spreads? No. Last week we had a very untimely decline. If the market had held its own for those last 2 days, Thursday and Friday, we would have had really nice returns in the model account. Instead, we were scrambling to cover those short positions. We were able to do so effectively because a couple of them would have represented really big losses for us on Friday. So very untimely. We're going to sit, we're going to wait, see how all of this plays out. And then we'll know probably in another week or so how much gas is left in the tank and if we can move forward and start considering some other bullish put spreads. We'll also be one step closer to that stimulus bill. We will also have a lot of earnings behind us, so we'll be able to evaluate post earnings reactions and lean on those. So from a swing trading basis, I'm fine being on the sidelines for right now, especially given the market volatility. So let's take a look at a couple of stocks. We'll go into the bullish searches, and there were a couple that were showing up that I really like. One of them is Disney, and I'll show you why I like that. So we'll put up the major moving averages so that you can see those. Got the 200-day, got the 100-day, got the 50-day moving averages. You can see how the stock is above all of those. We get this big rally up, and then we have this nice, steady, downward sloping channel here. This is a bullish flag formation, and you can see how the stock has broken through that downward sloping trend line to the upside with the stock currently trading at its high of the day. It bounced off the 50-day moving average. There's really nice horizontal support here. That was the gap right in there. I think that if you can sell a bullish put spread, keying off of that 167.50 level, so selling the 167.50 puts, buying the 165 puts, doing that for a 50-cent credit, I think that's a really decent spread. I think that Disney is going to continue to grind higher, and it could even take out the all-time high. But this downward sloping trend line that was broken out to the upside after that test, I think is significant. I think the stock looks like a decent play. And let's take a look at that earnings announcement date. February 11th, so you would have to sell a bullish put spread that expires this Friday. You could also just take a bullish stance on the stock heading into that earnings announcement. Let's go into buy into earnings and let's see if Disney appears on this list. I don't see it, but this is another great source for stocks to buy because these stocks have a tendency to rally into the earnings announcement. They've done so over the last 3 years more than 75% of the time. So these will represent some great opportunities. Take a look at any of them to see. Cisco is one that I highlighted last week. It held up really well during the market decline. It's in pretty decent shape right here. Let's see what ATVI is doing. I also don't like anything that's gotten super, super hot that's really run hard. So I'm continuing to take a look, see what else we've got on the list here. Nothing is popping out at me, so I'm going to go into bull run, see what else we've got cooking here. VFF, let's take a look at that. You've got another bullish flag formation here. We've got earnings on 329, so plenty of time on that one. Let's take a look. I know Caterpillar had been coming up on our searches also. This is actually a better play because it's post earnings. You can see earnings before the open there. Stock pulls back, tests the 50-day moving average. There's your horizontal breakout right at about that 50-day moving average. That 50-day comes into play at 149. It comes into play at 182.94. So you would want to try and key off of that 182.50. So in this case, you'd be selling the 182.50 puts, buying the 180 puts, doing that for a 50-cent credit because there's $2.50 between the strike prices. We want to get that 50-cent credit because then we would make 25% on that play if the options expire worthless. I believe that the stimulus bill will help companies like Caterpillar because they are exposed to an infrastructure build out. That should be good news for it. We've got home construction should be fairly robust because we have lots of mortgage applications right now. I like the fact that it tested the breakout. I like the fact that the breakout held. I like the fact that the 50-day moving average held and that it's got a positive post earnings reaction. All of those things will be working in your favor. That would be my suggested trade for today. Sell the Caterpillar 182.50 puts by the 180s. Do that for a 50-cent credit. And if the stock breaks below the 50-day moving average and closes, keyword closes below the 50-day moving average, you would need to buy that spread back. So we don't care what happens intraday on a lot of these swing trades. Let the stock move around. Don't get head faked out of the position. But if it closes below that key support level, then you've got to be concerned because chances are it will test the 100-day moving average after that. Let's take another snapshot of what's going on with the S&P. You can see 1OP indicator has not crossed yet. We're getting that green candle that I had referenced. So now what I'd want to see is a failed attempt to make a new high for the day. And then in the next 2 bars or so, I want to see that long red candle. That would tell me that sellers are getting more and more aggressive at the high of the day and that the market doesn't have the strength to break out and that they're looking at this as an excellent opportunity to take profits. We had end of month, beginning of the month fund buying helped us also yesterday and today. So that's a force in addition to the mega cap tech stocks announcing earnings after the close today. Very, very strong market rebound. 11-year bull markets die hard. 9-month bull markets die hard. When I was doing my market analysis last week, I've been telling you cash is the best place to be. Why? For swing trading. Why? Because you can get a drop like this out of nowhere and it can really, really hurt you. Oh, well, if we're going to get a drop, Pete, then we must be wanting to buy puts, right? No. Why not? Because these snapback rallies are violent. That's why we're not buying puts. If we had, we would really be taking a hit right now. So what do we do with this information? I hate waiting on the sidelines. I'm so anxious. I want to have a trade on. You've got to be patient right now, and you have to find out what's going to happen with the market here. Was this just a little temporary dip to flush out buyers? Are we going to take out this high with ease? If we run right back in the next couple of days and take out the all-time high on heavy volume, I have no problem getting long. No problem with that at all because I'll have a lot more clarity and I'll have seen the price action that I need. But before then, I would be waiting for another retest of this low from last Friday. And if the market stalls out here, get a little bit of a retest with a higher low, that I would aggressively sell out of the money bullish put spreads on the notion that that bid is still out there. So this is a period where you've got to be relatively passive. We've got to wait for the price action to tell us which way the market's going to be going. Then we can jump in and move forward. I hope you enjoyed the content today. I wish I had lots of trades for you to look at, but I believe this is a low probability market environment right now. I think cash is the best place to be if you're a day trader. Lots of great day trades firing left and right, and lots of big intraday ranges for the market also. So please subscribe to the YouTube channel. Give this video a thumbs up if you like the content. Make sure to turn on your notifications and watch the market in here. We're almost 2.5 hours into trading. See if we hit resistance here, and if the market starts to come in, you'll know that we are short the S&P futures. We've got a bearish cross on the 1OP indicator. Realize that it is predictive. You don't jump on it right away. It's telling you that there is danger ahead, so we'll be watching for a breakdown below this support level. In fact, I'm going to click on alert. I'm going to double click here. I've got my alert line set so that if that happens, I'll know about it. Again, thanks so much for watching. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.